Welcome to those joining us. We'll be starting the conversation at the top of the hour, but thank you for joining us. Welcome to those of you joining us. As I said, we'll be starting very shortly in about 30 seconds or so, but thank you for joining us. Well, welcome to this Innovation Forum webinar, the first in our new series discussing the energy transition. I'm Ian Welsh, and I'll be your host for the next hour or so. The energy transition has seen remarkable growth in renewables, yet fossil fuels still account for around 80% of the global energy mix. Progress is undeniable, but our ambition and implementation out of step. We've got an expert panel here to help frame this discussion. Scott Neilson, partner in A&O Shearman, Tanja Lischka, Director of Government Affairs and Energy Policy at Siemens Energy, Alan Baker, Managing Director for Global Head of Energy Transition at Societe Generale, and Vlasios Souflis, Chief Operating Officer, EMEA, Lightsource BP. And many thanks to Innovation Forum's Natasha Bodnar for coordinating the panel and for bringing us all together today. So I'll turn to our panel shortly, but we want to hear from all of you as well. Please be thinking about points and questions that you would like me to put to our experts and write them in the Q&A box on your Zoom window. Please note your name and organisation when putting your question. You can, of course, like others' questions by clicking the thumbs up, and the more likes, the greater the chance that I will put that question to the panel. We are recording the webinar and we'll share the recordings with everybody in due course. Okay, let's go. Scott, welcome. Perhaps you can set the scene on energy transition for us. Where has the most significant progress been made, and how has policy and regulation helped drive innovation? Scott.
Thanks, Ian. I'd say that the bad news is that fossil fuel production and use is increasing in terms of volume, not decreasing at the moment. In fact, just about all kinds of primary energy are going up, including renewables. People are saying that it's energy addition, not energy transition, as a result of the increase in fossil fuel production and use, and renewables being added on top to meet growing energy demand. This is true now and comes as a surprise to many. However, it's not always going to be this way. People feel that the energy transition is slowing, though, and really, why is that? Well, let's just sort of step back for a second. Part of the problem, I think, is that the IEA set high expectations with their net zero goal by 2050. This was created in COVID when emissions were going down because we're not moving around, and there was hope that the graph would also go down after that. However, the IEA basically stretched things a little bit, and it's human nature to think that the experts did the work and we could defer to them. But if you look at the detail, they assumed things like a carbon price going up to a level of up to $6,050 per tonne by 2050 to make their net zero curve work, and sort of buried that point on page 152. So we probably shouldn't have been so easily misled if you think about it, because it's basically the fundamental pillars of our society are ammonia, steel, concrete, plastics. And these four pillars are why we really live in cities. All are hard to abate. And we were taught in school that our food comes from the sun and water and soil, but actually ammonia in fertilizers is produced from fossil fuels. And that is what drove an agricultural revolution, which resulted us in all of us living in cities. Václav Smil said between 1800 and 2020, we reduced labor needed to produce a kilogram of grain by more than 98%, and reduced the share of the country's population engaged in agriculture by the same 98%. 98% of us then moved to cities. So agriculture, ammonia for agriculture, oil for vehicles and machineries, concrete and steel in huge volumes are the key materials that allowed us to move off the farms and live in the cities. The volumes of oil, gas, cement, steel, plastic, and ammonia that underpin our lifestyles are huge. Volume matters because big systems have inertia, and these are enormous systems which are hard to change. That's why people are feeling that not much has changed, that inertia, right? So, and we were never going to get to net zero by 2050 when the average time it takes to develop a single mine in the US is 29 years, according to S&P Global, sorry. In addition, from the macro perspective, governments in advanced economies are now, on average, more than 100% indebted when measured against GDP. And that's approaching levels last seen after World War II. The peace dividend is gone, as people say, so defense spending is up. Aging populations in the developed world means that tax revenues are down, health costs are up. Busted public services from infrastructure to healthcare like the NHS need investment. And this has created tight budgets for governments, limiting the scope for energy transition subsidies going forward. But there are two key points which I think provide a positive outlook. Firstly is a little known fact that fossil fuels don't need to be replaced by the same amount of primary energy. We don't need to replace wasted energy. So we just need to provide energy services. So I'll give you the example of England. A few years ago, England used, or the UK to be precise, used 7,900 petajoules in a year as primary energy. I love petajoules because a petajoule is 1 million billion joules. And in the UK's case, 4,900 petajoules of that 7,900 was waste heat, because fossil fuels are so inefficient that about 2/3 is lost as waste heat. So the UK only needed that year 2,600 petajoules as energy services. So what I'm saying is we only need 32% of the primary energy we use now if we substitute renewables, batteries, and nuclear for fossil fuels. Secondly, investment is definitely heading in the right direction, notwithstanding the noise you hear out there from people like Donald Trump. And the reason for that is simple economics. A professor from Oxford recently said that the price of solar panels are 98% cheaper than when he first analysed them in 2004. He said that today, building a fence with solar can be cheaper than using wood. Now, presumably, he's not talking about mahogany or rosewood, but that feels like a bit of an inflection point to me. In fact, since 1980, the price of solar panels is down 99.6%, and that's really thanks to China. Likewise in batteries. Battery cell prices are down 99% since 1991. There are also huge investments in grids being made, and I think some of the other panelists will touch on this. So, investment drives what our energy system will look like in the future. And if you look at the direction of travel and in the detail there has been a massive shift in investment. So let me just finish by outlining the shifts in investment over the last 10 years as the picture becomes clearer. So based on IEA numbers, over the last 10 years, investment in oil has dropped from first to second, down 34%. Natural gas has dropped from third to fifth, down 19%, despite gas being a transition fuel. Renewables, on the other hand, have come from third place to first, up 109%. Both grids and storage and energy efficiency have moved up to third and fourth, respectively. So you get the picture. Investment in renewables, batteries, grids, and energy efficiency is outstripping investment in fossil fuels, even though the sheer volumes of fossil fuels are currently still increasing. So the rate of change is in favor of energy transition investment, and you will see fossil fuels come off relative to renewables and batteries over time. There is a revolution happening.
Thank you. Can you just touch very briefly on the sort of regulatory picture? What's being helpful here and what's hindering transition?
So I think they're kind of two sort of different things. I would say what's helping, things like subsidies have been helping. And you saw that in the US with the IRA being there and then being taken away. And I think subsidies have been very useful to bring down the costs of different technology. So you saw the price of offshore wind coming down in the UK, prior to post-COVID inflation, largely as a result of the subsidies in the UK. And that drove, a growth of the offshore wind market generally. China has also been subsidizing their development of their wind turbines. at a much bigger scale, and are really producing some remarkable results. So sort of state-led funding has really been a game changer in some places. That hasn't necessarily been the same with solar, in terms of that has been driven by, basically production in China at a large scale, bringing the cost down and improving the technology over time. That some of the subsidies have been kind of like introduced and pulled back, like in the IRA around hydrogen and things like that. So that slowed them up. But I think some of those projects, when you looked at them and the governments looked at them, they started sort of saying, well, that's a bit tough, because, when you started building out the costs of those projects, they looked pretty hard for the governments to handle when they were basically having other tight budget constraints. Maybe I'll just stop there.
Okay, thank you, Scott. Thanks very much. Lots to come back on there. Alan, welcome. Let's talk a bit about sector funding trends then. Can you talk a bit about the challenges you're seeing? I mean, are there sufficient? Are there sufficient funds? Are there sufficient projects? What are the challenges you're seeing?
For me, I guess the positive news is that it's not funding that's holding up energy transition per se. I think there's a huge amount of liquidity in the market for clean energy projects. I mean, that's been there for many years for renewables, but also in terms of some of the new technologies that are coming through. I mean, we saw 8 billion being raised for the carbon capture projects in the UK, the Teesside project. We've seen similar amounts being raised for other energy transition related industries. And I think underlying that is the finance community's own transition. So, the NZBA, before it disappeared, catalysed banks on a trajectory to try to achieve net zero. Banks adjusted their capital allocation towards cleaner energy projects, away from maybe what you call traditional fossil fuel energy, although it's still being financed. So you've got a sort of trend within the institutions to focus more on clean energy. You've got the desire to fund those projects. I think what we're struggling slightly with at the moment is the pace at which those projects are coming forward. I mean, we see huge progress in the US. I mean, we've closed a lot of transactions in the renewable space in the US, for example, that were subsidized by the tax incentives. So really, in the US, people put their foot on the accelerator to get those projects done. That's slowing down slightly. In Europe, we've seen the offshore wind industry slow down because of the increase in borrowing costs, plus the increase in supply chain and challenges in the supply chain as well. So there's a kind of pent up now, I think, liquidity wave waiting for those good projects to come through the system. But they will be able to raise financing if they're structured correctly. We're confident of that.
In the US, then, you mentioned that things are slowing. Can you just remind us of the picture? Because there were projects that were in play or in train will continue to have the funding or subsidies or support from the IRA. So what's the timing on that?
Well, it's complicated, because probably I'm not the best on this, the best person to comment on that. But if you look at, for example, offshore wind, where we were involved in a number of projects in the US, that stopped completely, or new developments stopped completely. In the onshore space, there are still projects being done. But I guess going forward, we wouldn't expect to see the same volume of transactions in 26, 27 than we saw in 24, 25. So it's not a complete stop. It's a sort of slowdown in the volume of transactions, but that liquidity for the sector is still there. I mean, some will be redeployed. I mean, the banks won't just sit on that money. It'll be redeployed to other sectors. But it is, in terms of bank policy, in terms of the direction of travel of banks, the focus is really on the financing of the clean energy projects as they come forward.
So what do you need to see then to turn this around? I mean, you talked about some of the specifics of why things were slowing or lack of projects coming through. So what do you want to see going forwards then?
I mean, the key things for us, I think, are a sort of consistency of policy. Financing is very difficult in an environment where people are unsure about the policy. And we're seeing a little bit of fragmentation, I guess, in the political will to get to net zero at the moment. And people's perception of what net zero means. So where do we get to and by what target date? So that's a little bit unhelpful in the sense that it creates a little bit of concern. From a financing perspective, it's probably easier to manage than it is from an investor perspective. So I'm sure Lightsource BP can comment on that more. But that ability to predict what a market's going to look like over the coming years is what really drives our capital allocation, our decision to put resources to work in particular geographies. So whether that's Asia Pacific, whether it's the US, whether it's Europe, Middle East, we look at the trends in policy, trends in the political environment to work out where to put capital.
Okay, thank you. Well, it's loads again to come back there, but Alan, for now, thanks very much. Vlas, moving on from Alan's comments then about projects and the fact that there's funding, but not the projects that are necessarily attractive right now. What is the renewable sector doing to develop more viable projects and structure them so they are more attractive to Alan and his colleagues?
So I think there's a couple of things, and there's a lot of things from Scott and Alan I definitely agree on. I think the pace is really the question. The energy transition is happening and it's going very well. I think there is a question mark now, and part of that is also because I think renewables are a little bit, at least on the EMEA side, because I don't think we have that kind of policy issue that much on this side of the world. So I'll talk more about that part. But it feels like there's three major reasons why, let's say, the pace is slowing down. The first one is, again, victims of our own success in a way. When you have a lot of solar coming online, you have solar cannibalization. That creates an issue on the price. Essentially, you're generating when you don't have demand, and that creates all kinds of trouble. That has kind of generally reduced the outlook for solar-only, let's say, power curves. That creates, of course, a downward pressure on the revenue side. So you have a returns question there. The second one is around rates, and Alan mentioned that debt has become more expensive. It's a very debt-driven business. You have an 80-20 split between debt and equity usually, and it has a little bit of a double impact because when the rates are going high, you have more expensive debt, but also the expectation of the investor is going higher. So that is coupled with the power prices creates a bit of a double whammy, let's say, on the returns. The third one on the pace is coming around public acceptance, and we see now that the timing to actually get a project online, you have to time in some time, let's say, some buffer for making sure that the public is actually with you. And I think that's something that we always had in our minds, but now with more solar and more wind coming along, I think we need to do a better job explaining why this is good. And I think it was a good question. What does net zero really mean for them personally, and then at the local level? So I think those three things are kind of delaying that pace. In terms of solutions and how we are trying to tackle that, obviously, we cannot know what the central bank rates will be, so we can't do much about that. We definitely are working with all of our communities to make sure that things come online faster, they understand it, and it's one of our major areas of focus in the coming years. And I think it's a pan-European problem. I don't think it's a single country issue. But then on the front of the power markets, I think there's a fundamental shift. So while the energy transition is happening, I think the industry itself is very young. And I think we're seeing another transition of the industry itself from trying to go fast and connect. So you go for your land, your permits, and your grid and connect as fast as possible, which has allowed to have the pace that we had up to now, to actually be much smarter on how do you manage and operate and deliver that energy on the right time with the right shape. And so on. I think that part is something that requires a lot of innovation. There is innovation at the level of technical elements, and I'm sure Tanja might touch upon this. There's a lot of work to be done to actually, have a co-location of a battery together with solar, together with wind. How all that communicates with each other? How do you dispatch energy? Who goes first, and so on? How do you interact with the DNOs? So there's a technical innovation required. Then you have an innovation around power markets. And it's not so much about, there is a regulatory and a policy element, but it's also about what do the new power purchase agreements look like. And They have to be hybrid. You got to have different types of commercial settings. And I think the customers at the moment are not there yet as well. We are coming out with a lot of different instruments, and we have a constant iteration to make sure that we get there, so that you can combine not just solar, but a multitude of assets, hybrid assets, to basically deliver at one power agreement. And then you have a third innovation, which is on the finance side. So once you have those contracts, how do those get tied up with debt and the banks that we talked before? So a lot of work on those three areas, and that's the main focus. I would say if there is one key thing that from a policy perspective, and especially in EMEA, and we're seeing it actually happening. So I don't know if you guys are aware, but there was a very recent royal decree in Spain. They also had a blackout. They're rolling out more storage, and we see that coming actually from every other country. And we need just more of that, because that is the key to basically enable more capacity to be installed. It makes the grid more resilient. It makes prices cheaper, and it basically allows also for the energy security part, which I think is another topic that has come up in the last 2 years. Obviously, Europe doesn't have its own indigenous resources for oil and gas. It's a 600 billion a year cost to the continent. So the more we do, the more resilient the full economy becomes. And I'll stop there.
Thank you. Thanks, Vlasios. Again, lots to come back on there. But this is perhaps a nice time to bring in Tanja. Welcome, and thank you. Thanks for your patience. Can you talk a little bit about, I know that Siemens Energy is involved significantly in grid optimization, and the storage side of things that Vlasios has been mentioning there. So can you reflect a bit about the importance of grid optimization and the barriers that have to overcome to improve this at pace?
Yeah, sure. Very happy to. So let me start with maybe stating somewhat the obvious, but the world is electrifying, right? Imagine a city at night. Lights are on, trains pass by, data centers pulse with digital life. And what is really the invisible power behind it all? Well, the power is energy, right? Energy became really the heartbeat of our civilization. But now what we see is that this silent superhero, which is behind it all, and that is the electricity grid, increasingly comes under pressure. The electricity demand, as we all know, is rising. Our grids are aging or are already old. The climate crisis is accelerating. More renewables, which is great, enter the system. And this creates really a moment of complexity. And in this moment of complexity, we really need regulatory clarity, but we also need courage from all the participants in the system, and we need some energy realism. So you asked about grids and how we can strengthen the grids, which play, in our opinion, a crucial role here. Because we need a robust transmission network to really deliver the electricity from the power plants, of course, to the end users. And by 2040, we need to add or replace more than 80 million kilometers of grid infrastructure globally. So it's a massive task. What do we need for that to happen, or what are barriers that we see at the moment? So one important topic, and we heard it from one of the previous speakers before, is predictability. We need, a sustainable system really requires political reliability, and, we need to have a long-term planning in place. And we also need to, build out these resilient technological expansion paths. So predictability, long-term planning is really key here. Secondly, and this is very important, and this is a huge barrier that we see at the moment, especially in Europe. And this is about the grid tenders. So we need simplified tender designs for a greater output from the existing capacities that we have, and to achieve some cost savings. So let me give you a little bit of background here. Today's grid tenders are really overly complex, very bureaucratic, and they're not at all designed for industrialized production at the required scale that we need to build out a grid to build it out in a way that we can react to this increased demand of energy and the increased renewables that come in. Let me give you some numbers. So today, tenders are often comprised of around 23,000 pages of technical specifications, detailing out every little detail, every little sub-supplier that we as grid technology manufacturers should use to, for example, deliver a transformer. This eats up, as you can imagine, a lot of our resources, and it doesn't contribute to the functioning of the grid. Let me give you an example to make it maybe more understandable. If you compare it to cars, grid manufacturers like us are asked to produce very highly individualized Bugattis, even though Europe at the moment really needs the rollout of mass manufactured Volkswagen. Otherwise, we will not achieve our set goals. So we need more capacity instead of complexity, and functional tenders are focusing on the functional must-haves in tender documents, the functional must-haves of the technology. What does the transformer really need to do? Not where is the toilet, would offer a solution. So third point, public funding. Of course, and another topic here is capacity expansion. So our company is already heavily investing in grid capacity and manufacturing. We have expanded a factory for transformers in Austria, in Germany, but also in Croatia, but this alone will not be enough. And then a fourth point, grid digitalization. You mentioned optimization. So we don't only need to add more, but we also need to use the current grid more efficiently. And we need to ensure there are investments in it. We see really from a TSO side that there are many hurdles still in place. So this is a bit the focus on grids. Let me briefly touch upon another topic. So I talk about grids because we have a huge grid technology business, but we also, of course, focus on low and zero emission power generation. So that means we are active in the offshore wind turbine industry and also gas turbines. For us, both is needed. In Europe, we still have the priority to step out of coal. This requires a guarantee for security of supply when the sun doesn't shine and the wind doesn't blow and the renewables, and we heard about the storage issues still, so storage will be a huge part of the puzzle. But for this coal to gas shift to happen, we need to have still for gas to play a role. Otherwise, and gas, when I say about gas, it doesn't work without, hydrogen capable gas power plants, which of course is our priority to get, new ones already hydrogen capable or existing ones to adapt them. We can do this up to 100% already. And if we don't, get this transition in place, we risk supply gaps, we risk price spikes and grid stability issues. So yes, two topics to bring to the table from our side today.
Thanks very much, Tanja. Just audience, do be thinking about questions. I can guarantee right now, if you put a question in, you'll get it answered, or you certainly get it asked, as we have yet to have any. But so please be thinking about your questions. You don't want to hear me asking my questions for the next half an hour. So please think of your questions, put them in the Q&A box, and we'll get them to the panel. Tanja, I wondered to get around the problems you mentioned around funding, around just getting the challenges met, particularly with the funding for new grid infrastructure. How can that be short-circuited? You mentioned a lot of challenges, but how do you think that can be short-circuited most effectively?
I mean, we need to get, and I talk now specifically about Europe, make sure there are possibilities to fund, extension of our manufacturing capacities. which is now under the new state aid guidelines also possible for grid manufacturing capacities. Another problem that we see here, and we also, I think, moving in the right direction to get projects done, is the risk. So, you know, banks, they have difficulties investing in major projects because the risk is just not bearable. And we've seen on an EU level technical guarantees for wind, and this also, now looking at the grids, needs to be extended also for grids projects to make sure, you know, some of the risk is being taken from the bank, and we can actually go ahead with these projects. And the EIB, the European Investment Bank, of course, plays a huge role in that. So these are a bit, you know, two topics. I think it's, you know, we've heard also, you know, investments or funding is not the main obstacle when it comes to the energy transition, but still there are, I think, ways to improve it and to focus on the right topics. And we, rightly so, renewables have been on top of the agenda, but now we also need this attention for the grids. Otherwise, the system will not.
Thank you, Tanja. Alan, I wonder if you might be interested in commenting a bit on some of those challenges about making risks more bearable, perhaps, and also the role of transition energy sources in developing energy projects. I mean, Tanja mentioned the fact that whether we like it or not, gas turbines are going to be part of the energy mix for some time, just to ensure that security of supply as other sources of renewable energy and storage come online. So, sorry, quite a long-winded question, Alan, but in terms of making the risk more bearable, what do you think is required?
I think I fully agree that risk is fundamentally the issue. So if I take, for example, related to grids, but interconnectors and route to market cables, so either connecting country to country and power flows or connecting large scale renewables to the market. Both those projects historically, or at least the interconnector, may have been done by a TSO inside their regulated asset base. So relatively straightforward for a grid company to manage that kind of project. They get compensated for the capital through their regulated return, and the consumer at one point or another pays for that expansion. I think what we've seen recently, and I think what's necessary to accelerate the transition, is that some of those assets, some of that capital needs to transfer to the private sector. And we've seen that with interconnectors. So if you take the last two interconnectors that we financed, both UK, one UK to Germany, one UK to Ireland, they were financed under a cap and floor mechanism as a merchant cable. So if you just built the cable and assumed that you would earn revenues from the power flows, not bankable because the risk of the electricity flows across that cable are very difficult to predict, not something which a bank is going to be willing to stand behind. But adding the cap and floor mechanism to that, so that you know the minimum price you're going to get, but you exchange that for a maximum revenue. After that, the revenue goes back to the authorities, back to the consumer, enables you to then raise money for that asset in the private sector. And that mechanism has been well received in terms of a way to share risk. So it's not risk-free for the banks. There are risks for the banks in those structures, but it's also not necessarily within, or it isn't within, a regulated asset base that can be developed in the private sector. So those kind of initiatives, I think, are going to be more important in terms of how we expand the grid network, how we develop large-scale renewables with route-to-market cables. I think one of the challenges with the grid expansion is that that's even more integrated into the existing businesses of the TSOs, the grid operators, as regulated assets. So as I said, the obvious way to expand it would be to ask them to invest that capital, to give them a return on the capital, and then charge it back to the consumer. I think one of the challenges I have at the moment is you can see a lot of press coverage, a lot of pushback now from consumers about the level of their energy bills. And I don't think they necessarily understand their energy bills and the impact of renewables, the impact of all this facilitating infrastructure, if you want to call it that, for the energy transition. because it's not been really explained to them possibly. The messaging they've had is we're going to build a lot of renewables, a lot of offshore wind, and that's going to lead to you having a cheaper bill, and it hasn't so far, or it hasn't, at least, you know, in the minds of the consumer. If you did the analysis properly, it's probably cheaper than it would have been had it been a fully gas-fired system, for example. So I think there's a lot of work to do on that side to get the social license to invest the money we need to in the infrastructure. And we're talking tens or hundreds of billions of euros. It's not small amounts. So it's not a 5 pence increase on someone's bill. This is significant capital investment that needs to be made. So that side of it, I think, it also needs to be addressed. We need to get the messaging right. We need to get people to fully understand what the true cost of energy transition is and where the benefit is for them in terms of energy security, in terms of cost savings at some point, or the cost savings relative to where they would have been. Going back to the point on gas, I fully agree that gas is a transition technology. We've financed, or we still are financing, gas-fired power plant, but we are looking now for those plants to be either hydrogen ready or with carbon capture, like Net Zero Teesside was, in order to have the lowest possible carbon footprint for providing dispatchable, reliable power to back up the intermittency you see with renewables, working together with storage. So it becomes a very complicated sort of area of the market to analyze. And again, the key thing for us in financing those projects is being able to rely on the revenue stream. So we are looking for contracted revenues, whether they're underpinned by PPAs or through some form of government subsidy mechanism, like the CFD mechanism at Teesside. That's what's necessary to make the risk attractive for banks. The final point of this is, I mentioned the pace of the energy transition. People invested a lot of time, a lot of money in the hydrogen space, in the expectation that hydrogen was going to become the almost like the panacea and solve all these problems. But hydrogen is very problematic in many respects, and it hasn't developed as quickly as people anticipated. So we've got a gap where, you know, you're likely to see gas plant developed, which is hydrogen ready, but without a very clear timeline or a very clear story on when that hydrogen is going to be available. And that will give some financial institutions pause for thought, because, you know, their focus is not to invest in fossil fuel assets that are then operating on fossil fuel for the next 25 years, 30 years. So I think, again, you know, they're looking at the different parts of the sector, coming up with financing strategies, coming up with, you know, sort of future proofing of those assets is going to be critical in getting the financing done.
Well,
If you don't mind, maybe I can just quickly jump in on the.
Yeah, I do want to talk about hydrogen, but want to bring everybody in. But please, yes, Tanja.
Yeah, just on the fully agree. I talked about, you know, our gas turbines being, you know, able to handle the hydrogen, but it's true, there is no hydrogen, or we don't, you know, there was a huge hype, at least in Europe, on hydrogen, and it's getting more and more difficult. We need the demand, you know, we need to create demand, which is currently not there, and there is, you know, barely no hydrogen available. So there is a lot to do, and I think it also, again, on Europe, you know, there are some very strict rules also in place that might need to be looked at again to ensure the market can actually ramp up, because otherwise it doesn't make sense. You're right. We are building, you know, the possibility to use that, but we need to create demand, and we need to, you know, see where hydrogen actually makes sense. Sorry, just wanted to support also this point. Back to you.
Great. No, thanks, Tanja. Scott, I wondered if I could bring you in here. What are you seeing in terms of appetite for hydrogen? I mean, as Alan outlined, it does feel like it's the impetus has somewhat declined. Are you seeing that? Are you thinking do you think it's going to come back in terms of the kind of dash for hydrogen?
Yeah, I mean, I think there was a lot of exuberance for hydrogen. A lot of those projects have been cancelled. Some of them are still trying to jump through that IRA subsidy window in the US, which is going to close. But when, like, the Japanese government was also thinking about bringing hydrogen in for power, with long value chains where you have to build a whole lot of new kit. And as people got into the cost of it, and the government looked at the subsidy that they have to give, they were starting to think, hang on, this is really not a good idea now. because the cost was very high. And if you look at the feed cost of hydrogen projects, electrolyzers, everyone was talking about the cost of electrolyzers coming down over time and things like that. But the electrolyzers are about 10% of the project costs. And 40% is if you're taking green hydrogen from somewhere, 40% is the electricity cost. And so, hydrogen always is going to be more expensive than that electricity. And people are talking about free electricity, but people don't build power to sell for free, right? And then the balance of the plant, which is electrical, chemical, civil engineering, was the rest. And you can't really bring the prices of those down, like you might be able to with the hydrogen. So as those projects got, basically designed out in feed, they were looking way more expensive. And also bringing hydrogen in for power use. Not only do you lose a lot in the conversion, basically, so if you're taking green energy and you're converting it into ammonia, you lose some energy. You put on a ship, you actually need a whole lot bigger ships and more of them compared to LNG. You lose a lot in the transportation. And then you get to the other end, and then you put the ammonia, say, either directly into a coal-fired power plant, and then you basically lose some again. So it just becomes very, very, very expensive. And that was the fundamental thing that basically has largely killed it. People are looking at more local projects now. Even in Europe, people are saying, okay, we'll look at locally produced hydrogen. But I don't think it makes sense for power production. I'm sorry. It does make sense if you're trying to solve some of these hard to abate sectors, direct reduction in steel, or replacing grey hydrogen in petrochemicals and things like that. But that's really a job for later, I would say. There's a lot more simple stuff we can be doing now. Transmission is one of them, which is a bit of a roadblock, and we've touched on that. But I see that as a huge issue. And then just basically building out grid scale storage in batteries, electrifying everything, building out the solar, which is cheap. These kinds of things. People are concerned about the costs of things like hydrogen, and I think they're right. But if you're passing through like cheaper sources of power, then okay, that's going to be good for everything. And that's technology we can do now. Transmission is very unsexy technology, but it's going to basically, it's a mature technology that we can roll out, and then electrify a lot of things, and that's going to make a big impact for the energy transition.
Vlas, I wondered if you could talk a little bit more about the hybrid style projects that you mentioned. Perhaps you comment on the where hydrogen is in that, but more generally, what do you think of the kind of future of the hybridization of projects to make them more attractive for Alan and his colleagues, to deliver the sort of points that Scott's just made, and to then for people sitting in Tanya's position can help then in terms of develop the infrastructure that's required?
I think it's a one-way street, really. Hybridization is the only way to make things basically reach a level where it makes sense for the investor, makes sense for the bank, makes sense for the customer as well, but also for the grid. And I think we touched on a lot of those points before. There are so many benefits of storage in particular, because there's other benefits with wind and solar, let's say, but on storage in particular, you have so many benefits to the grid. You have all kinds of services that can actually benefit the grid. And I agree with Tanya, there's two things you can do. You can either build new grid, it has its own CapEx implications, but it's necessary. But then the low-hanging fruit is how do you make the existing grid much more efficient, resilient? You can do more things with it. And if you take country per country, you'll see that in Europe, the regulation, the policy around it, the way that the TSOs and the DNOs are thinking about it, it's very, very different. And from that perspective, there's areas that people can learn from others, and then we can work with the more advanced ones, and then those lessons learned can go to those. And storage is every single one of those solutions. But it's not the only one. You have demand side management, you have the things that Tanja mentioned about, but I think the low-hanging fruit is really how do we take much more value out of the existing, let's say, infrastructure. Then in terms of the customers, obviously, storage can basically deliver electrons when they need it, rather than, there is the cannibalization that we said, but then there's the DAC curve, and you have consumption at the time that solar cannot provide. So there is an element of that. That also helps with financials. So it helps the bank and it helps ourselves to make better decisions in terms of returns. Because obviously when you don't have demand, the price is low. When you have demand, the price is higher, and we can actually capture some of that as well. We're seeing now, and we didn't see that earlier, because also the cost curve of BESS is falling rapidly. And that's also because it's very similar to solar, but actually it's also helped by the fact that the same technology is used also in automotive, and that has its own explosion. So you have a lot of commonalities, but with the capex getting lower, we're seeing that now you don't even need to import energy. So just a project that doesn't get the storage charged by the grid can still be viable just by having basically behind the meter storage and solar together. So without any import, just an export, existing grid connections, agreements, and so on. So I think that's the main thing. I will just add for wind, you can basically, not in every country, again, it's very, very dependent on the shape of the energy and how wind and solar match with each other between day and night. You can have a shape of energy that's closer to what a baseline, a baseload factory could produce, and that's an easier power agreement for us to sell. If you add storage into that, then you can normalize it even better. But that's, of course, takes a lot of work. I talked about acceptance from the public, and wind is even longer and even more difficult these days. I'm talking about onshore in particular. So I don't know how many of those will be done if there is no political will, the public acceptance together with it, so that they see the tangible benefits of it, and so on. But these are kind of the two main things. There's a lot around it, but they definitely help on returns, which makes projects more attractive, and therefore deploying more liquidity that's available.
Thank you very much, and thank you. We have some questions from our audience, so great. Firstly, the first question we have was looking at reflecting on the blackout in Spain, and in terms of what the political will and consumer sentiment, the impacts on that, in terms of the consumer view of renewables. Tanja, do you want to have a talk about that? Did you see the impacts yourselves?
Yeah, I mean, we are, of course, closely monitoring I think, still ongoing. There have been some reports, but ongoing investigations, and of course, us, committed to support getting the grid more resilient and getting stability in. I think this, the Iberian blackout really has become a case study in a way now, showing grid vulnerabilities that we unfortunately still have during high renewable penetration. And I think it kind of forces us to now look at it more deeply and, really draw conclusions from, what happened there to accelerate reforms in the grid design. And I do think, and in, interconnection, I really do think when we look at how, in Europe on EU side, that grid stability is no longer just, an Iberian concern, but it has really become a critical topic across Europe. And this recent blackout really accelerated again the discussions about, okay, what do we need to do to make the grid more stable and get it more resilient, especially looking in the, von der Leyen's proposals on these energy highways, getting the interconnectors, more focus on the interconnectors, because we really have a urgent need for a robust and flexible grid. So I think I don't see that it, is. Of course, there is a question, okay, how could this have happened? We had so many renewables at that time, but I don't think that this kind of puts bad sentiments now on the renewables, but it highlights again the questions that we need to get answered on the grid stability.
Thank you.
If I may add,
Sure,
on this. I think from a political perspective, it definitely had an impact, but I think a positive one towards actually getting more things done around the grid. And we're seeing that in practice with political will. We don't see the pace around renewables actually reducing. We only see things that make the whole situation more resilient. And actually, to Alan's point, there has been a study in Spain in particular. And we have been a victim of our own success because you have so much deployment of solar, which has actually had a very good impact. And the study was for 2024. I think it was the electricity would be 40% or something higher than what it is today if from 2019 onwards they didn't deploy that much solar and wind that they have. So there is a direct impact on the price. And I think there's more now. There's more data availability. The question is, how do we take those data and translate it into something that people understand and can connect with? And I'll leave it to that.
Thank you. Alan, do you want to comment briefly on impact of incidents like the issue in Spain? What that impact does it have on investor certainty?
Obviously we wait for the outcome of the various studies that are going on, but I don't think it damaged our desire to invest in Spain, to finance projects in Spain. I think what it has done is it's acted as a wake-up call for the whole of Europe. I agree with Tanja. It's not a Spain and Portugal problem only. That the more Europe is interconnected, the more there's a risk that you could get this rolling blackout coming through. We've had problems previously in Australia, which were blamed on renewables, but turned out not to be renewables. So I think we need to understand why the grid behaved as it did and try and resolve that, but make sure it's resolved across the whole system so that we don't start to see a contagion of these kind of events impacting more and more. I think it's quite useful from a consumer perspective. I mean, it's not useful that they lost all their power, but the reality is that is highlighting to them the need for the investment that's going to be made, because if they want a more sustainable grid that delivers power 24/7 when they want it, then that has to be paid for at the end of the day. But I don't think it's particularly damaged confidence of the finance community. And one of the areas which is quite challenging, I think, for financing is curtailment and how you manage negative pricing, which to a certain extent is related to the Spanish situation, in that if you have the capacity where you need it at the time you need it, then maybe these kind of events can be avoided. But we've got a system where we've often got overcapacity in one area, undercapacity in another area, and we're paying for somebody to generate. You're paying somebody, or they're not receiving revenue for generating power that ultimately isn't needed. So it comes back to grid efficiency, the use of AI, how you try to optimize what we already have and make sure we make the most of the grid and make it more resilient by having availability to as much of that capacity, as many of the interconnectors as possible to provide that resilience.
Thanks, Alan. Scott, I wonder if you want to comment, is there an element of not letting wasting a good crisis here? This sort of shock is the sort of thing that's required to demonstrate what is going to be necessary to really take all this forward.
I think so. Like that what I understand in terms of the detail of that issue in Spain was that, yes, there was a lot of renewables built out, but there was like some kind of inverter issue where there were too many load following inverters, which basically act like sort of lemmings, and all sort of if the grid stability is, or the what do you call it, the sort of amount of power going through the grid drops, everything follows, and they all follow down off a hill like lemmings off a cliff. So part of, if that's correct, and I don't know if it is, but like if that's correct, that's just a matter of designing your grid better. So I think it is a wake-up call, as Alan was just kind of saying. Everyone's got to focus on getting their grids right, and the transmission has been, like I said, is a big issue that we need to fix and will enable the energy transition.
Great, thank you. Blas, we've got a question about and I think it relates a little bit to some of the kind of energy as energy for specific purposes in the grid, and energy as service. That was what I was searching for. In terms of around things, high energy use facilities like data centers, that sort of thing. How much are you seeing projects being developed to specifically develop and to deliver rather energy to data centers and that sort of high use client?
I think it's an interesting question from a perspective of what a data center really is. I think we started with data centers that were more for cloud services. Basically, this call that we're having is coming out of a data center that has certain latency requirements and so on. So that's what we're mostly used to. And then what has come with basically artificial intelligence is a different type of data center that includes training models or inference, which is basically tokens. Whenever you write something up and you wait for the answer from whatever language model you might be using. So that's pretty much something that nobody really thought it would catch up so quickly. So everybody was thinking about the first bit, but I think that's kind of there's new analysis around that. I think there's different issues around how do you capture that demand, because you definitely have a product AI that is not yet really fully utilized. Everybody wants it, it's cheap enough, it's in every mobile. I think most companies have not really done as much as they can with it. So the autonomous vehicles are not here. That requires a lot of data to be managed at real time. So all that are, I think, coming up with a product that works and has enough capital to basically suggest that the bigger, let's say the Magnificent Seven, might decide to become hyperscalers and actually give a lot of infrastructure money for that. But then the software fastness, let's say, how fast the world is moving, is kind of hitting on a wall, and the wall is really energy infrastructure. And I think it's different between US and EMEA. I think US is more a question of availability of electrons. So where does the actual energy come from, including, of course, capacity as well. But in Europe, it's more a question of grid capacity. And there's all kinds of new models that are coming up where you can see, you will see, we're working on more co-location deals where you can actually deploy your demand where your generation is. And I think that's something that obviously benefits the TSOs as well. Going back to Alan's issue, you have the power somewhere, but it's not really where the actual demand is. And if you couple that with the fact that the latency for this call here is not the same as the latency required for AI, let's say, then you will be seeing more areas that are available to actually have a data center like that in the middle of nowhere, as long as there is a cable line close, and have more co-location deals. I think it's definitely something that might be filling up the gap more than people thought, and covering a little bit of the demand of hydrogen for all the reasons we mentioned that is actually dropping. So definitely something we're working on, and definitely something that Europe should be focusing on as well, because there's a geopolitical aspect to that as well.
Thanks very much indeed. As ever, we get lots of questions right at the end. We are coming towards the end, but I wondered, Scott, could you perhaps comment a little bit on the role of carbon capture and storage, and also where we are with nuclear in the mix, and perhaps the small nuclear reactors that we hear about?
Yeah, carbon capture and storage, is different in different countries, but I mean, it's going to be a necessary requirement for the hard to abate sectors, basically at some point. It's basically a cost center though, so it's at the moment is being funded by a lot of government money, subsidies. For instance, Langskip or Northern Lights. There was a huge amount of government subsidies there. The same kind of concepts discussed out here in Asia, where I am, about the big hubs in places like Malaysia. It's something that's going to be necessary, but I think you don't need a lot of them at the start. You probably need to focus on all the other things that we can, simpler and cheaper things we can do first. But you are going to need some to get them up and have demonstrational projects, develop the standards, develop an industry around them, so that we can build it out at bigger and bigger scale. Next decade, I would say it's an important part. You're seeing it moving in, as Alan mentioned, in the UK as well. In the US, and in fact, going back to the data centers, the hyperscalers building out data centers like crazy. People are now talking about carbon capture and storage, off gas-fired power to fuel the data centers. So that is a developing thing. On nuclear, obviously, I mean, I'm based in Japan and I lived through Fukushima, but I'm a big supporter of nuclear. I think it makes a lot of sense. But obviously, there's a lot of fear around it. For it started life as a weapon, and then moved to power, and then there's been a lot of issues around it. I'd say England's obviously building some, and we're involved in them, like Sizewell C, for instance. France has got a lot in plan to build more. I think it's a good idea. You'll see the places like China are going crazy on nuclear. They've got 31 under construction at the moment, and have built about 54 plants. So I think you're going to see a lot more of nuclear coming through. And also fission is very interesting. If there's ever a silver bullet for the energy system, it's fission. And people are actually trying to commercialize that now. It's probably going to take 10, 15, 20 years maybe, but it will be commercialized. And I think that'll be a game changer.
Fission, it's the future, and it always will be. I've heard someone quote before, but yes, who knows? It may come. We're coming towards time. I do want to ask the panel to just give us what they're taking away from the conversation today. So, very briefly, please, Vlas, what are you taking away from the conversation today?
I think it's been positive to kind of confirm the thesis, and it's coming from very different points of the industry. So I'm coming up more positive that actually we understand the issues. Obviously, getting to the solutions is something that everybody has to agree with, and we got to bring people together, policymakers. We got to bring the EU in. But that's something that it's good to have a target and people agree what the problem is. It's a good place to start.
Thanks, Vlas. Alan.
I'd say my conclusion is again positive. I think my view, if you answer the exam question at the beginning, my view is that we are behind the trajectory we need to achieve what we set out to achieve. But that's maybe not surprising. The current energy system took hundreds of years to evolve with a lot of investment. We're trying to fundamentally change that in the space of 10 to 15 years to 20 years. So probably not unexpected that we're going to see bumps on the way, but I think the momentum is positive, and we're encouraged.
Thank you very much. Great. Tanja.
Yes, sure. I also see a positive. I think we are touching upon the right topics. I think my concluding sentence would be, and we have to continue with that, but for every euro that we spend on renewables, we should at least spend one on grids and on storage to get the system holistically right.
Thanks, Tanja. And Scott, you did paint quite a bleak picture at the start of your remarks. So I guess it feels like we are leaving in a more positive frame.
Yeah, I mean, I'm very positive about the energy transition. It is happening under our feet in any event, just because it makes a lot of sense. And I think if governments can do more to facilitate things like transmission and the build out of grid storage and things like that, and stability around the grids, I think that's going to make a big difference. But the price of renewables will win, and I think sensible solutions will prevail, even though we might go in the wrong direction here or there. That's lessons learned, and it is going to take a long time, as Alan said, to change such a huge energy system because of the inertia it has, and it just takes a bit of time to turn that ship around, and we need to do it the right way. And I think everyone working together will get us there.
Great. Thank you very much indeed. Well, I'm going to have to draw the discussions to a close. We've run out of time. We're going over time slightly. Many thanks to our panel for their times and insight today, and thank you for the questions from the audience. The conversation continues next week with the second Innovation Forum's Energy Transition webinar series, when we'll be focusing specifically on financing trends and risks, something that we've discussed a little bit today. And you can sign up at the link that will come on your screen. We'll certainly send you that on follow-up email. And of course, the conversation will continue also at the first Energy Transition Innovation Forum in Amsterdam on the 15th and 16th of April 2026. Passes are now available at launch discount levels. Full information, go to the Innovation Forum website. We'll be in touch with webinar recordings in due course for you to share or listen to again. I hope it's been a useful hour for you. I've been Ian Welsh. Thanks for joining us, and goodbye.
Bye.